Good morning. I am Ben Ayers, Dean of the Terry College of Business, and it's my pleasure to welcome you to our Terry Third Thursday. We are here at our Terry Executive Education Center, which is home both to our executive programs as well as our professional and executive MBA programs here. This is our monthly event. It's a great opportunity for students, alums, other business leaders to network. In the audience today, I know that we've got some executive and professional MBA students, as well as at least one of our undergrad students. I'd like to thank our Alumni Board Committee that arranges this each month. They do a fantastic job. Nancy Watley is now leading the group. I'd also like to thank our sponsors, our corporate sponsor, the Bank of North Georgia. We really appreciate their support, as well as our two media sponsors, Atlanta Journal-Constitution and Public Broadcasting Atlanta, WABE. Some news on campus. U.S. News rankings came out earlier in the week. UJ moved up. We're now 18th among public schools. The Terry College is now 17th among public business schools, and we have 4 programs, undergraduate programs, that are ranked in the top 20 among all programs, so we're thrilled with that as well. Some upcoming events. October 15th is homecoming on campus in Athens. We will be playing Vandy, and before that we have a tailgate in front of Brooks Hall. If you are interested in attending, then you can register, I believe, on our website. There is a small transactional fee for that. On November 3rd, we're going to have the Mason Public Leadership Lecture on campus in the UJ Chapel at 11 a.m. And Chairman of Augusta National, Billy Payne, will be speaking that day. It's the 20th anniversary of the Olympics in Atlanta, and so we are going to be recognizing that on campus with his lecture. Upcoming Terry Third Thursday speakers. Next month we'll have Alana Shepard, who is the co-founder of the Shepard Center. And then on November 17th we'll have Ron Rogowski, who is Vice President of Global Brand and Sponsorship of UPS. He's also Chairman of the Atlanta Sports Council. As some of you know, one of the pleasures that I have on campus is to teach a leadership class called the Dear One Fellows class. It was started in 2010 by Doug Ivester, and a highlight of that class is a weekend immersion at Deer Run Plantation in South Georgia with Doug and other executives. And I think we've got at least one of our students, Doug Momey, where's Doug? All the way on the back. So Doug is here today. Doug will be graduating this fall with a double major in finance and MIS, and so if you have the opportunity to meet him, he is fantastic and will be a leader in the business world very soon. Without further ado, I'd like to ask Tim Murphy to come up to the stage and introduce today's speaker. Tim is a member of our alumni board, and he's also Senior Vice President of WestRock. Tim?
So it's a privilege to be able to introduce Steve Voorhees this morning. I'm going to withhold comment on his tie. You'll see why when he gets up here. So I'll just leave it at that. You'll see that when he comes up to speak. To give some background on Steve, Steve received bachelor's degrees in economics and mathematics from Northwestern. He also has an MBA from the University of Virginia Darden School of Business. Steve became CFO of RockTenn in 2000. And was promoted to Chief Operating Officer in 2013 and then became CEO of RockTenn later that year. In July of 2015, Steve became CEO of WestRock, which was formed as a merger between RockTenn and Midwest-Vaco. He serves in that position today. Since this is a business school event, I thought it would be good to talk a little business. And at WestRock, we're really into the numbers. We get down deep into the numbers. So to give you some numbers around WestRock, when Steve became CFO, his first year, the sales of the company were $1.4 billion. Free cash flow, which is something that we relentlessly drive at WestRock, was $74 million. And the company's equity market capitalization was $400 million. So then you fast forward to today, the last 12 months ended June of 2016, the company's sales were $14 billion compared to the $1.4 billion. Free cash flow this year will be over $1 billion compared to the $74 million. and the company's equity market capitalization is $11.4 billion compared to the $400 million 16 years ago. So in all of that, we've done that and maintained and today have an investment grade credit rating. So with all the acquisition, merger activity, combinations, the company still maintains an investment grade credit rating today. So obviously as a public company, total shareholder return is a key metric and something that we obviously follow very closely. In the 16 years where Steve has been CFO and CEO, total shareholder return for WestRock is in excess of 1,300%, which is 18% on a compound annual basis, and that's triple what the S&P 500 has been over that 16-year period of time. So obviously you can create outsized returns in the lowly old paper packaging industry, and he's demonstrated in the leadership team the ability to do that. I think I'll speak for my WestRock colleagues that are here today that the only way you generate these kind of results is with focus and intense focus and attention to detail. Steve is as focused and detail-oriented as any leader I've been around. He also has a relentless drive for solving business problems, and he probably is the most creative thinker I've ever been around. So with that, it's the Terry College Alumni Board of Directors' pleasure to welcome Steve Voorhees, CEO of WestRock.
Okay. Okay, good morning. I'm glad you focused on the past because I'm going to focus on the future. Okay, and the future, I saw this morning in the Wall Street Journal. It says now is the real new year. Because a lot of people say you get married, attention shifts to new topics. At WestRock, this is the New Year's Eve before October 1st, our new year. And when I came to work at RockTenn, I thought the September fiscal year was a little bit unusual. And I love it because you get everything done before the holidays, and then you can come to work on January 1st and start getting done what you need to get done for the year. And so this really resonated with me, so I brought that. And I'd like to recognize we have Ernst & Young and Deloitte in the room, which are outstanding service suppliers. And we need you to get back to work soon because we've got to close the year, but I appreciate your coming out. I'm going to talk about three things. I'm going to talk about packaging, I'm going to talk about WestRock, and then I have preparation meets opportunity. And I love the expression preparation meets opportunity because that is, in some respects, a definition of luck. But I think success comes from preparation, and when you're prepared, you can take advantage of the opportunities that present themselves. And that, in some respects, many respects, is the story of our company. So I think we work hard. Sometimes we play hard. We probably don't play as much as we'd like to, but we have fun being a successful company. Now, we make packaging. So this is my show and tell. Okay, you may think of this as a box, and it is a box, okay, but it is a tremendous product. Okay, so it is light. So I'm going to toss this to you, Zach, okay? So no damage, okay? Okay, you can toss it back. Okay, holds a product many of us buy every day. And this is on a preprint liner, so it's a nice billboard for the product. Okay, so boxes are everywhere. Okay, it's a tremendous product. If you order anything on e-commerce, look at the bottom, and then we have to put a shield on it. And if it says WestRock, I can assure you it is the highest quality box you can possibly get. Okay, so anyway, so this is a great product that we make, and it makes the business fun. And I brought, let's talk about packaging. Okay, so packaging is eye-catching. Okay, so this is a great product. I sampled this product at the Anheuser-Busch Brewery in Jacksonville, and it is a beer with tequila. Okay, and if you see it on the shelf, take a look at it. I encourage you to sample the product, and then it's eye-catching. 66% of consumers try something new because the packaging caught their eye. Okay, so I'll toss this to you too. Okay, we can pass it around. Yeah. Oh, just one here. Okay, then we got another one coming up. Okay, it's a differentiator. Okay, so a lot of our business is based on insights that allow our customers to sell more product. So we invest in developing insights that help our customers sell more product, because if we can help them sell more product, we can sell more product. So 73 to 85% of purchase decisions are made at the point of sale. So design plays a key role. So this is a product called Takeaways. It's the Tuscan Picnic. Okay, so if you see this on the shelf, then it's like, hey, buy me. Okay, so this is, so Steve, here. It's all right, the food is not in there anymore. Okay, so, and next, and it is, packaging is functional. You might not think of a pizza box as being functional. Okay, and this is in fact functional. However, it's football season. This is your flick football game. Okay, you open this up. The rules are on one of the sides. And then here's goalpost. And I mean, it's creativity makes you, okay, hopefully this allows you to have a desire to, one, eat pizza, second, buy this box. Now I'm going off stage, so I'm told I'm off camera when I do this. So here, pizza. So anyway, we're in a fantastic, fun business. I say you might not think packaging is an attractive business. I think it is a fun business. We have great products. Okay, if you think about packaging, oftentimes you can't see the product you're buying. You can only see the package. So the package makes a statement about the product. Stable demand. Okay, people are going to eat. You know, hopefully brush their teeth and kind of use, so make toothpaste boxes. Stable global demand. It's a competitive industry, and I think that's really good, because competition makes you better. Okay. It's technology intensive. You might not think of packaging as being technology intensive. The equipment which is made to package large volumes of things that we buy is very sophisticated. It's a very digital industry, because when we need to get the colors exactly of our customers exactly right, and that just takes a lot of work. These colors, by the way, are WestRock colors. They're, there's no, I did go to Virginia too, but that's okay. But it's technology intensive. I think it's a terrific career opportunity for highly motivated people. And there's a lot of different areas to where we need expertise. Okay, so obviously we make paper, so we need a lot of expertise on making paper. We're a very commercial business. So when I talk about competition, the assumption is you can make the product. If you can't make the product, it's like do a U-turn, come back when you can make the product right. I think being able to design something that meets the needs of the customers, adds value, and is structured correctly is a huge issue for us. Leadership. We operate over 250 facilities. A typical facility might be $50 to $100 million in sales, might have 100 to 200 people. That leader in that location is hugely important to the success of our company. It's an opportunity to make a difference, because you can see what we do every day in the marketplace. And it's pretty fun when you order something, have it come home and see the WestRock on the bottom. I'll go with my wife to Costco regularly. I'll be flipping the boxes over to say WestRock. So anyway, I think it's a great industry to work in. And so that's the packaging industry. Now let's turn to WestRock. Okay, so we started talking about merging, seems like forever, but wasn't that long ago. It was, less than 2 years ago, we started talking about merging. There's two companies, MWV and RockTenn, both tremendous companies. And I put some facts up there about both companies. They are a great fit. So MWV is more focused on consumer packaging, had a global footprint. RockTenn was weighted toward corrugated packaging, also had a significant consumer packaging presence, and is more focused on North America, but the highly complementary product and market and geographic mix. So the companies, as we live it every day, are becoming WestRock, have become WestRock, and we're better than either company could have been on their own. So that's, if you look at the footprint, we start with it's a consumer packaging platform with scale. We operate in North America, Europe, Asia, South America. So the beverage carton down in Australia. So we operate around the world in consumer packaging. We have a corrugated packaging platform with scale. Large North American presence, large presence in Brazil, and a presence in India. So picture that as being the raw material of making a company. So put the companies together, and first thing you have to do is come up with a name. So we hired a consultant. I'm somewhat embarrassed to say, but we hired a consultant, and they did a lot of research in what we wanted to state with respect to the name. And the theme of better together came through. And so the name has meaning because we picked, it's a combination name of West from Midwestvaco and Rock from RockTenn. So that became WestRock. Okay, the next thing you have to do is come up with a logo. So we got another project to do. And we came up with this as a logo. And WestRock, we're part of an ecosystem. So we live in the communities. So one of these layers is community. We have customers, suppliers, investors, and employees. So I think all of those constituencies are important, and each layer represents one of the areas that we have to work in. We picked orange to put in the middle. Safety is unbelievably important for our company. We have 39,000 employees, operate significantly difficult to operate manufacturing equipment. We need to focus on safety, and the orange is in there because it's a safety color. So it is intentionally there for that reason. So we have a name, logo. So this is what we become. We're a packaging business. So we decide we need some aspiration, and our aspiration is to become the premier partner, unrivaled provider of paper packaging solutions in consumer and corrugated markets. That is a differentiation strategy. So we're trying to help our customers sell more product. The more we can get involved with our customers to look at their total cost structure, the better it is for both of us. And that's captured in our aspiration. We make a lot of beverage cartons, 6 billion cartons. 50 million corrugated containers every day. 13 million tons of paper production on an annual basis. We're a good-sized company, $14 billion in sales, 39,000 employees, 250 operating locations, 30 countries, and 100 billion square feet of converting production. Okay, now that's facts. Now that doesn't talk about people. Okay, so I just went through kind of more the facts and figures. As Tim says, I am detail-oriented. We'll kind of drill into things. But the values equation's a material part of our company. And it's in the press about culture and everything. We have invested a lot of time and effort in working together to develop a culture. One thing that has made it really easy is no matter where you come from in our organization, we're WestRock, and we have a common aspiration to become the best paper and packaging company that we can be. So there's just high degree of consistency in that. And then we have the constituencies are on the outside of this. But I do want to talk about the values, because we intentionally picked the values that we have, and I believe they come in a certain order. Okay, so the first one is integrity. And integrity is a personal thing. I think you know whether you have it or not. And I want everybody at WestRock to feel comfortable acting with integrity, that I think we know individually whether we're acting with integrity or not. And so that's number one. That's a starting point. And if you don't have that, then we want you to have it. Okay, I think it's very difficult for somebody to fit in our organization who does not act with integrity. Number two is respect. Respect is to me, it is a two-way thing. So we will disagree, okay, and you need to disagree in order to come up with the best solution, but we will disagree with respect. And so we treat each other with respect and attempt to earn the respect of people we work with. It doesn't matter if you're a customer, supplier, investor. So that's number two. Accountability. We kind of came up with accountability, and it was there's not a certain number of values that you need to have, but if we had a fifth one, would have been responsibility. So we're trying to pick between accountability and responsibility, and so I Googled the definition of responsibility, and it was accountability, and vice versa. And so that didn't really help. We hired Shan Cooper, who many of you know here. The first time I met her, I was actually I was working on this, so I started talking to her about it. And she came up with the definition of accountability that I really liked, which is see it, own it, solve it, do it. So if you're acting accountable, you look at a problem, it doesn't matter if it's necessarily your problem or somebody else's problem. And the safety analogy works really well for this, because if any of us see somebody kind of, this is about a 6-inch drop, so I'm not going to drop here, but if I'm here and I'm going to run into a wall, it's nobody's job to tell me, hey, Steve, you're going to run into a wall, but somebody who's acting with accountability would see me doing this, would own the problem, say, hey, wake up or whatever, and would do it. And I think there are a lot of times, I know I will get in a situation, I think it's a common thing, you're sitting in a meeting and you're feeling something needs to be said, something needs to be done. And when you have that feeling, if you're feeling accountable, you're going to raise your hand and say, what about this? So that's the accountability value. And then excellence is, I think, very straightforward. If you're going to take the time to do something, you might as well do it as well as you possibly can. Now, I think any organization, doesn't matter if it's WestRock, packaging company, toothpaste company, if you act with those values, I think you're going to be a successful company. So those values, to me, are very, very meaningful for our company. So got name, logo, got the footprint that we have, we've got values, so now what? So we're building a growing paper and packaging leader. Okay, now I'm pulling this from an investor presentation. I'm looking at our general counsels. I need to say, I may make forward-looking statements within the meaning of federal securities laws, and they will contain some risk and uncertainties, which you need to be aware of, and those are fully described in our disclosure. And our best place to look at is our most recently filed 10-K as of September 30, 2015. Am I okay? Okay. Now, so we also have, and we'll also be making reference to some non-GAAP financial measures. And I'm going to go over with the auditors here. Including maybe some adjusted numbers, and reconciliations of the non-GAAP measures to the GAAP measure is included in our quarterly earnings presentation, which are available on our website at westrock.com. Okay, so this is Ward and I, John, we're on the road this week. This is just our basic chart. Okay, so industry leadership. So I went through the footprint that we have, and it's the globe and everything. If you look at the markets we participate in, we're number 1 or number 2 in the markets we participate in. That is a great starting point. So we have scale. We have a differentiated strategy. That's a material fact about us. So we're focused on customers. I think relationships are incredibly important, and we focus on developing those relationships in a meaningful way so we can help our customers do well in their marketplace. And our product line is incredible. So we sell folding cartons, we sell corrugated. A lot of customers buy both, and we have the ability to go to our customers and supply them just a lot of different solutions to their needs. Okay, so that's who we are, what we're trying to do. Then our investor expectations we've set intentionally so people can track how we're doing, and it's cash flow, productivity, and growth through balanced capital allocation. So we generate a lot of cash, and our ability to put that to work is key to our success. I'm going to go through each one of those. So strong cash flow generation. Have adjusted free cash flow of in FY16 of $1 billion. Okay, so $1 billion is a lot. Okay, and we have, I think Tim mentioned, we focus on cash. I think accounting earnings is not as good a focus as focusing on cash, because I can pay the bills with cash. I cannot pay the bills as easily with earnings. I don't know if I've never gone to a bank and tried to pay for something with earnings. Cash works really well, so that's why we focus on it. Our adjusted free cash flow yield is 8.6%. So that's a nice return. Productivity. As a manufacturing company, it's competitive, so we have to get better at what we do every day. So we have a strong focus on productivity. As part of the merger, there's a huge opportunity for us to become more productive by putting the companies together. We set a target of $1 billion in synergies and business performance improvements to achieve at the end of FY18. Okay. When we set that target, we had some pushback that was not enough. And our response was, let's get the first $1 billion, and then we'll worry about what we do after that. So we're very focused on the first $1 billion, and we're on a very good track. So at the end of the first 12 months, we're at a $425 million run rate. We've said we're going to be at $500 million by the end of this month, and we're very well on track to achieve that objective by the end of fiscal year 18. But that's something we put out there, so we track it every quarter about how we're doing. Last is balanced capital allocation. So we pay a $1.50 dividend. We maintain our target leverage ratio is 2.25 to 2.5 times. And we invest capital in our business. We have a lot of opportunities to invest in our existing business. We have opportunities to make acquisitions. And I only want to make good acquisitions, only want to do good capital investment opportunities. And we will buy back stock to the extent that we cannot utilize that capital internally. So that is the balance. And we're after that like just every day. Okay, we're asking ourselves, where is the best place to put our capital? Over the past year, we've invested $841 million in our business in capital. About half of that is maintenance capital. The other half is capital that we earn a return on. It might be, on average, 20% after tax. We look at acquisitions. We've invested $588 million in mergers and acquisitions over the past year. Acquired a nice paper mill in Dublin, Georgia. over the past year, acquired a folding carton business, the Symbeo packaging business from Symbeo. That was about $100 million. And we formed a joint venture with Grupo Gondi, which is the best packaging business in Mexico. We invested $175 million in that for 25% interest. So we're putting capital to work through acquisitions. And then we owned a specialty chemicals business, which is not core, not a paper and packaging company. So we decided we would spin that to shareholders. And we did that, completed that in May. Okay, so I don't know if you've thought about this, but it's been kind of busy at WestRock for the past year and a half, because merger is huge. Spin, I'm looking at Steve Meadows and Ward, spin is like unscrambling eggs. Did 3 acquisitions, captured the performance improvement opportunities that we have. We have a lot of people from WestRock, and I just want to thank you for what you've done. It's just terrific. Okay, so that's us from an investor standpoint. Okay, now it's all about people, so I'm going to shift to at least why I'm here today. And this is, it's a blank page, but I'm going to fill it up with Terry graduates. Okay, so when you think about preparation meets opportunity, we are very grateful to the Terry School for preparing at least 32 graduates to come work at WestRock. And it's a great opportunity for us, and hopefully will provide great opportunities for Terry graduates. So I think we've got 32 full-time employees, and we have 6 interns. And they just make a tremendous difference to the organization. It's great to have that asset in Atlanta for our benefit and the benefit of the community. It makes a huge difference to us. Then here's the this is Jeff Kramer, works in our tax department. The Terry School gave me my whole career. Maggie. Terry, UGA was a fantastic experience. In addition to knowledge and leadership skills, I gained confidence that continues to help me on a daily basis. The friendships and contacts are a bonus as well. Frank Winter. Terry provided opportunities and connections within the business community that would not have been available to me otherwise. While in school, Terry certainly opened my eyes to the breadth of opportunities for careers within the business world. Michelle Colbert. Terry School provided me with the resources needed to start my career off on the right path. You can say your own quote. This is Jennifer Graham Johnson, who leads our human resources. When you're offered to learn from some of the best, take full advantage of it. You build great confidence to do things that you never thought you could do. Terry gave me that, which led to a great start in my career. I wouldn't be here without the great start from Terry. Sean. Where's Sean? Okay. Terry School's rigorous curriculum and impressive faculty prepared me well for a career within the challenging competitive world of finance. In addition, the Terry School broad alumni network has already opened a number of doors for me and has been a critical aspect of my career development. Then here's Tim. Terry provided me with a finance education that stood up against the other graduates in my analyst training program from some of the best academic institutions in the U.S., including Duke, Vanderbilt, Northwestern, Penn, Cornell, North Carolina, and Texas. Okay, so we have a tremendous group of people at WestRock from Terry, and so thank you very much for having the program that allows us to become a better company. Okay. And this is so preparation meets opportunity. I look at this as being a combination of WestRock and Terry. I think it's a virtuous circle, and I look forward to continuing to be able to hire Terry graduates in the future and help them build a great company. Thank you.
So we have
speak a little bit about the merger process, kind of on the C-suite level? I know mergers can be difficult because managers, might lose responsibility or gain them. I'd just be interested to hear a little bit about that.
I think every process is different, and so I think you have to look at the facts and circumstances around the process. A merger, by and large, is a merger, and that's what we have with WestRock. And I think John Luke was the CEO of Midwest-Vaco. We spent literally 10 months. So all of this is in our SEC disclosure that I referred to before, but I think I met him February 28th, 2014, and just went to talk to him. And then the more we talked, the more commonality we had in the way we should go to market and the way we could put the companies together. Then we started talking about would it make sense. There was some economic issues associated with it, and so over the course, I think we announced the merger in January of 2015. There's a number of issues to work through, and I think every process is different. I think it's dependent on the people involved. I found it very helpful, no matter what we have with respect to WestRock. If you picture what's good for WestRock, it's a lot easier to come to a solution than if you focus on something else. I think focusing on what the company needs kind of allows I think a lot of the issues to be addressed. And there's not underestimate the seriousness of any issue, but if you know what you're trying to do, it's a lot easier to come up with the answer.
When you think about the next 3 to 5 years, what are maybe your top 2 concerns now that you're a 35,000 employee company?
It's hard to identify, top 2 or whatever. I mean, we have a great platform. We have a great foundation from which to be able to grow. And I think just being able to come up with a process to where we can kind of march forward on a day-to-day basis, because we need a lot of people aligned. And I think keeping the alignment is probably as important as anything else. And I think the culture becomes part of that. I think we're through a lot of putting the companies together. So our organization, I think, is very well positioned, and I'm looking forward. I can't wait till a year from now, because I think we're going to be operating. I think it will be a lot more visible what a great company we are and what potential we have.
Steve, to go back to kind of M&A for a moment, you guys have really taken a very ambitious approach over the years, even prior to WestRock, Smurfit, and some of the other companies that you all have done. So there's a financial side to that equation, but there's a very significant human capital side to that. Can you explain or talk to what you all's approach towards kind of the cultural integration has been? It's not easy to take these companies and this large a numbers of people and stick them together. Do you all have a process that you work through, and if so, what does that look like?
A lot of times you learn by what doesn't work so well. Right. And we acquired Smurfit in 2011, and we thought we could go to the Smurfit organization and say, this is great, you came out of bankruptcy, this is RockTenn, and everything would work out okay. And we had a year to where it was the most weird year in my working career. And when I say weird, you're coming to work and things are not working. Okay, and I was CFO at the time, and went from CFO for a $3 billion company to a $10 billion company like that. I'm looking at John, treasurer, for $3 billion to 10. Okay, anybody who's in the staff role went from 3 to 10 billion. They don't give you a textbook. Okay, so it's not like you can go, and things are not working. And you literally do not know if it's you or somebody else, right? Because you haven't done it before. You're just in an area of, and we worked through that, and my predecessor, Jim Rubright, did, over the course of about a month, we turned the management team, and things were great just after that. Okay, and what did not it's a lot easier to look at it after the fact in a rearview mirror than while you're in it. But bankruptcy is a terrible thing. Okay, and you understand you go bankrupt and you restructure and you go on. So the financial aspect is pretty, it's actually pretty straightforward because it's just another transaction. It's a complex transaction. The impact on people is devastating because most people want to work for a successful company. They want to be successful. And if you're working for a bankrupt company, then it drains the best talent from the organization and drains the energy and motivation. And that, okay, so anyway, so that was something that didn't work. Okay, so now just about every transaction we will do, and I anticipate we're going to continue to do transactions, we work really hard on the integration, not only on the, say, the financial side, the system side, but also on the cultural side. And so we do that, and I think we're getting, getting good at that. The merger has actually been a pleasure in that the alignment of everybody about what we want WestRock to become has been very consistent, and that makes such a difference. And we literally have complementary skill sets. And I won't go into that in detail, but just there's people have different perspectives, you end up with a better answer, and the cultures of both companies are very complementary. And as a result of that, we're getting the benefits of that.
You mentioned your $1 billion target as a result of the merger, and I believe it was you've already achieved $250 million of that. Can you talk about what areas of the business that you've seen the most significant impact?
Okay, we do have the $1 billion target. There's a element of cost which is corporate structure. So we're either have or will eliminate the overlap of corporate structure. We're effectively through that. Okay, so there's some savings from that. The biggest, another big area is procurement. And we got some help from in procurement, and we got after that very rapidly. And then our businesses are very complementary. In our consumer business, we've been able to integrate the volumes from the mill volumes from one company into the converting volumes in the other company. So those would be the large areas. Ward, you answered this question very consistently. I think I missed something. I didn't. Okay, and then we've invested a lot of capital in. We have better capital opportunities than we did before, and we're putting that capital to work. The $1 billion is a function not only of the merger, but the ongoing productivity programs that both companies had, and we're maintaining those and trying to put our foot on the accelerator.
Steve, earlier you opened the presentation with more of a marketing pitch. I came here today thinking you were a packaging company, but you opened it up as a marketing and packaging company. Talk about the evolution of how you just went from packaging to getting out in front of that with your customers.
First of all, our company starts with customers. Okay, and we do not have a business if we do not have customers. And the market is changing, I think, rapidly. The way all of us buy stuff is, some of us are going to stores more, most of us are not going to stores quite as much. When we go to stores, it's more to buy something which is in the stores compared to shop. So we try and stay on top of those trends as rapidly as possible. And it's enlightened self-interest, because our customers are changing as well. So that leads me to say, if you're going to have a packaging company, you need to understand what's going on in their markets in order to figure out how you're going to invest capital. So example, we have, we operate a couple dozen digital presses, and which are highly short run, customized product, so we could make a carton with your name on it and the UGA Bulldog on it, and okay, now that short run is, a lot of people like that, but there's still long run business, and so when we're looking at our capital, we have to say, do you want to invest in a long run press, short run press? You want to invest in offset, sheet fed? What are you going to do? In order for us to make those capital investments intelligently, I need as much insight. Our company needs as much insight into where the market's going. So that leads you to a customer, a kind of customer back look. And for us, the more intense relationships we can have with our customers, the better job we're going to be able to do for them, and then the better job we're going to do to invest in capital. So I think it's very appropriate for where the packaging business is now.
Good morning.
Good morning.
Can you speak a little bit about how sustainability fits into your plans for the company and whether recycled paper actually works for a packaging business?
I'm glad you asked that question, because sustainability is hugely important. I think the paper industry is somewhat misunderstood with respect to sustainability, and recycled works great. Okay, so we have about somewhere around half of our fiber is recycled, the paper that we make. About half is virgins from forest, from trees. And the Southeast United States is a terrific fiber basket, which is competitive globally. And so the business itself uses a sustainable raw material. The product can be recycled and is recycled. We have a recycling business that we recycle 8 million tons per year of recycled materials, and about 5 million of that goes back into our product. And we are, I think, outstanding corporate citizens in taking care of the environment and the communities that we operate.
Good morning.
Morning.
Yeah, just to follow up on what she was saying, because I had some questions about sustainability and virgin paper. I'm the son of a gentleman who's been in the industry for 35 years, works for a certain Australian-based company that actually is 100% recycled. So I'm glad you asked that question. I also work for the company that holds your equity comp plan and own some shares in WestRock as RockTenn before the merger. I wanted to ask about kind of the $50 a ton increase in paper, and with the kind of environment we're in now globally, why now for increase in pricing?
We get asked that question probably more frequently from investors than any other question. I think we look at our own system, so our ability to produce, our customers' demand, our inventory levels, and make decisions with respect to price.
You had mentioned at the beginning about business to consumer. Sorry, over here. Business to consumer packaging as a marketing product. Do you see business to business packaging also as a potential marketing product?
It is. I mean, and so we will sell. We sell packaging to distributors who will take that to businesses. And I'm not sure if there's. Do you have a specific example in mind about?
I'm thinking more of suppliers to manufacturers and things like that. Although any form of B2B.
Yeah, I think so. We will call on businesses that will make auto parts. We'll sell packaging, corrugated boxes to put into their packaging. Most of our business, or most of the corrugated and consumer business, is going to be consumer non-durables, either directly or indirectly. So anyway, so we have many, probably hundreds of relationships with called on a business-to-business side.
Morning, Steve.
Good morning.
You and Tim talked about the number of acquisitions you guys have done. Are you focused more on consolidation in the industry or organic growth, or can you talk about how you balance organic versus looking for the next acquisition?
We look at both organic growth and acquisition, so we will line them up. The acquisitions, the criteria we have is, in addition to financial criteria, is are we a better business with this acquisition or not? And the three that we've done, SP Fiber, done over the past year, SP Fiber has significantly improved our containerboard mill system. Synveo's significantly improved our folding carton footprint. The Gandhi transaction puts us in a market where we've wanted to grow for a long period of time in Mexico. And all of them make us a better business. So there is a nice thing about our business is it is not a overly consolidated business. And so there will be transactions that will come up, and the expression preparation meets opportunity is very applicable to acquisitions, because you cannot tell what's going to be available or whatever, so you always have to be prepared. And so Sean helps us. We meet monthly and go through our pipeline of opportunities and try and prioritize those best we can. We are very focused on sticking to our knitting. So we're more focused on making our existing businesses better rather than going off into left field and places we don't understand, because I think that's a recipe for not being successful.
SEC and accounting disclosures earlier, which you did an excellent job. Thank you. I feel much better as an investor. It got me thinking, you work in a fairly regulated environment, particularly international, and you hear lots of discussion these days with the election going on about trade and repatriation of assets. What advice would you give to the folks running for office? What sort of regulatory changes would you like to see to help your business?
I think just we are overly regulated, and just from business. So I think just generally there's too many regulations, and so I think our society is set up. One of the great strengths of the United States is the financial markets, okay, and entrepreneurism. And so we've had in the city of Atlanta, the Atlanta metro area, there's been a tremendous investment by technology and other companies in business. There obviously is on the West Coast. So I think there's tremendous energy potential in the United States. And I think the fewer regulations there are, the easier it's going to be for everybody to get after it. So.
Hi, Steve. Thanks for the talk. You mentioned the short-run digital press, which got me wondering, what's the hot area for innovation at WestRock or in the industry, and is it technological or operational or something else?
It's all of the above. So we talk about innovation a lot. I haven't talked about our capabilities, but you've given me an opening to talk about capabilities. So we're focusing on near-term results. We're also focused on generating, creating a sustainable company long-term. And we think if we focus on capabilities, that's going to be accrue to our benefit. So I'm just going to run through them. So strategy. Okay, we've invested a lot of time throughout our company, both by business and by function, and what are we trying to do? Okay, so a strategy, commercial excellence I talked about, and I think we're developing a way to go to market, which is going to accrue to our and our customers' benefit over time. Operational excellence and is incredibly important as a manufacturing company. We want to lever the breadth and scope of the enterprise. So that's 4. I got 2 more. And you asked about innovation. So innovation, we have a group that is just focused on innovation. So we have a pipeline. So we'll look at the customer's needs. We're going to be customer back. What do we need to be looking at with respect to technology? And that could be adding a coating to paper that allows the paper to perform better. Or we have customers who would like to take fiber out of boxes. effectively everybody would, because it makes it less costly and more efficient. If you take fiber out, you need to preserve the strength characteristics of the box. So we have people working on that. And then wherever we work in our company, we talk about what can we do to continuously improve. So innovation is that capability. We have people devoted to that, but then it's not, everybody can't say, oh, those people are innovating, because we need everybody in the organization to innovate. Then the last one is talent management. And then I want a company that people want to go work for, can succeed, have developed their careers to whatever their call it aspiration, or and I think if we can do that, and out of 39,000 employees, I think there's about 11,000 salaried. I'm looking at plus or minus 12. We're detail oriented, so we've got 12, and then we have a number of union employees and a number of non-union employees. And the workforce is changing, and we're working to adapt to the changes that we see coming in the workforce.
Good morning, Steve.
Morning.
My name is Tiffany Thompson, and I have a question related to retail. Going back a little bit to technology, you mentioned earlier that less number of people going into stores, and so when you are in retail, all of the manufacturers are competing, right, for that shelf space and to get that attention. And you made the point earlier that if you can catch their eye, then they're more likely to at least consider you. My question is, you're in that dealing heavily in the paper products. How do you see technology from a digital standpoint in retail changing the game? Are you guys looking into that, digital displays, et cetera, and how do you put that together with the paper products?
We do that, and an example is not hitting my brain right now, but we will integrate digital technology into the display itself. And so we've had, when our display business is based in Winston-Salem, so we've made a picture a vending machine for one of our customers and provide samples. So all I have to do is press a button and you get a sample of the product. So the customer likes that because they distribute the product. And if you recall, it used to be you get a sample of the product in the mail. Well, this way, if you have it someplace you can get something for free, well, you have to put in your contact information in order to get it. So they develop information that they can market their product. So we can assemble a display like that for the benefit of our customers. But it is, digital affects every part of our business. And so we look at digital and the other aspects in our society which are transforming our business, and I want our company to stay ahead of that, because if we can embrace the trends, we're going to be able to respond to those trends and move from a position of strength rather than response.
I wanted to say I appreciate what you said about safety earlier. I've grown up in mills and plants, so good stuff. My question, as a management major, I kind of walked in, saw a thing about Six Sigma. With being in an industry that seemingly there's not much manufacturing left in America, could you talk about process efficiency and kind of how you guys operate, I guess, within your plants?
We have an operational excellence. We have a group which is dedicated to, we call it performance excellence. I'm going to talk about two things that we do in that area. You mentioned Six Sigma, and it is a specific methodology, and we will train hundreds of people in Six Sigma, and the DMAIC, D-M-A-I-C, define, measure, analyze, improve, control, that's a process that you can bring to just about any manufacturing problem. Define what the problem is, measure how you're doing, analyze what you can do to do it better, actually do it, and then do it repetitively over time. So that is like throughout our company. Now that works really well. We've also found that if we can get the plant working together, coming to work as a team, that they will respond and enjoy what they're doing and figure out how they can do things better. And we're making investments in structured processes to allow those, really enable those teams to be able to work together. Oftentimes, if you supply a structure, that's helpful. We've done that. That's been in the relatively recent past, the past 2, 3, 4 years. We've been doing that more broadly throughout the company. Okay, Ben.
Let's give Steve a round of applause. Red and black are
All
colors.
right. That works for me.
Yes. Thank
Okay.
you very much.
Okay.
Really do appreciate you
Okay.
being here today
Okay.
and words of wisdoms. And I love the preparation meets opportunity.
Okay.
I think that's something that we all can focus on. And thank all of you for being here today. If you'd like for us to pay for your parking, make sure it's validated on the way out. Look forward to seeing you in October. Thank
Okay,
you.
great.
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 October. Thank
Okay,
you.
great.